is really one sentence. The financial system is broken. And now is time to fix it.
The most exciting thing about technology today is that we're able to bring down the cost of delivery substantially.
We're in a time of disruption. This is a chance for us to change the things that have been done for hundreds of years and benefit the end customer.
We really need to partner with innovative companies because they push us.
Modern businesses have needs for modern infrastructure.
Bo, I got an idea. We're going to create instant access at no cost and no APRs.
This is a huge change, but I think it'll be evolutionary.
For your customers, what do you see happening for them to help them benefit in the next 3 to 5 years from now?
Looking deep, and it comes down to one phrase.
Small businesses need access to their cash. They don't need more loans. The fintech architecture can be compliant, and it can move fast, and it can innovate all at the same time. And last but not least is that when small businesses win, everybody wins. And when fintechs focus on helping the small businesses win, then even more people win.
Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
So good morning and welcome to Fintech Confidential. We are here on the show floor at Money 2020 inside the infamous Money Pot in Las Vegas, Nevada. And I'm your host, the CEO of Voalyre, a fintech advisory firm. And today we're diving into something that impacts everyone here at Money 2020. It really ties into small businesses. Now, there are over 34 million small businesses across the US, and too many of them are really struggling to find the right way to get the money, the bank accounts, and some basic financial tools just to make sure they survive. When small businesses struggle, the community struggle. And when the community struggle, everybody struggles. But when they thrive, everybody wins. But we brought two people here with us today. They're actually doing something to change this dichotomy. So the first one we have here today is Ariel Blum. He's the founder and CEO of a company called Receive. And he's held senior roles at American Express, Green Dot, Melio. But he built Receive as the first earned revenue access platform for small businesses. He's really helping them unlock the cash they've already earned without having to borrow. Welcome to the show today, Ariel.
Thank you for having me, Ted.
The other person we have with us today is Jiang. He's the co-founder and CEO of Lithic. He leads Lithic, card issuing infrastructure platform, and empowers fintechs and financial innovators to build compliant, scalable payment products for the modern economy. Bo, welcome.
Thanks for having me.
So what we're going to do today is we're going to break down what's holding small businesses back, how fintechs are removing those barriers, and what comes next. Let's go ahead and hop into it. Guys, as we were prepping for this, one of the things that came up over and over again was cash flow. Every small business needs cash flow. Sometimes it goes out of the accounts faster than it comes in. Not only that, but what makes things even harder is the tools that they need to be successful most of the time just aren't there until they hit a certain size. Not only that, but then the funds are hard to access. So there's a whole bunch of fun stuff around that. Question I have, and Ariel, I want you to hit it on this one first, but why do you believe so many small businesses can't get the money, the bank accounts, or the simple tools that they're needing in order to grow?
So first of all, thanks for having me. Great to be here with Bo. Ted, great to see you. It's really one sentence. The financial system is broken. It was built in a box to service customers over the course of hundreds of years. And if you think about small business lending, it's as old as time. Folks needed to go buy procurement items, or back in the day, it would have been whatever term they needed in order to build that business that they were doing. So lending was core, or access to capital was core. And what's happened is it's compounding over time, where you have bad practices or nefarious players or just stagnant systems to service as many as you can without actually touching upon their needs. So the system is broken. And that's exactly why I started Receive to target this, to solve this, to create not another box to plop other customers into, the ability to mold that box around them, to give them the tools, the necessities that they need to grow their business. So like you said, it's broken. And now is time to fix it. We've never had more technology at our fingertips, more access at our fingertips. What is it? The definition of insanity is doing the same thing over and over and expecting a different result. Why are we doing the same thing? Why are we analyzing customer A from so-and-so the same way we analyze customer B? It doesn't make sense. Businesses are, like you said, the backbone of the U.S. economy, and we're here to help.
Oh, as you hear Ariel describe this, how are you seeing it from the systems and the architecture piece of it? Are you seeing the same things, or is it just a different perspective?
The infrastructure that powers most of how money moves and payments get delivered to end consumers and small businesses fundamentally built for a different era. If you think about the infrastructure providers that power cards in the US today, mostly companies that were built before the internet was a thing. And if you think about the waves of innovation since then, it's been like we've had obviously the internet, we've had mobile, we have digital currency, we have AI now, and you have like an entire class of companies now that are being built that essentially don't look like these traditional boxes that, banks and, incumbents are used to servicing. And there's a ton of opportunity, really, we see in sort of providing the infrastructure that, enables this new class of companies to thrive.
It's funny you mentioned the legacy providers. I spent a number of years at one of the large issuer processors in the country. You're right. I mean, one of the things that was missing a lot of times as we were talking to folks was really that partnership through innovation and leveraging the empathy of the end user. You guys have just mentioned like the things that are broken, how it's being done, but I want to kind of shift over to how it's being fixed or who is fixing it. Obviously, you guys are playing a big part in that. I look at it as the idea of fintech really should be to adapt to the needs of the businesses instead of forcing them to fit in that box that I was talking about. Bill, I want to start with you, but what do you see as the most exciting shift that has really allowed the fintechs to be more flexible for these SMBs than maybe the traditional providers?
So if you dial back, like what SMBs and businesses in general care about is, can I get access to my capital? Can I get the services I need at a price point that makes sense for my business? The most exciting thing about technology today is that we're able to bring down the cost of delivery substantially, and we're able to look at alternative forms of data that now exist in order to better service these types of customers. And so to me, it's all about being able to deliver a product that previously wasn't possible. And I think that's possible in today's world.
One of the things that, Ariel, you'd mentioned in a conversation is the process of getting started with Lithic. One of the phrases that you used that just really stuck in my mind was the fact that Lithic made Receive feel like the wheel, not just another spoke or a cog in the machine. I'd love for you to expand on what you meant by that, because that doesn't get said very often.
The ability to do card issuing in real time, push it via Apple Pay, those aren't things that everybody came to the table with. And we had a pretty extensive RFP process going through everything from API documentation to what the webhooks look like, everything across the board. So that's on the technical side. I would start that they were much more flexible, agile, and willing to meet us on that side. The second thing, and I think that this is true of anything, is people. So when I came to Bo early on and I said, here's what we want to do, right? Here's my mission. There was an immediate alignment. And I don't think that was true across the board. I think a lot of folks took a look and said, okay, this is an interesting business. By the way, we're going to price it accordingly. And that doesn't really work for a startup, right? As Bo kind of mentioned, we're in a time of disruption. This is a chance for us to change the things that have been done for hundreds of years and benefit the end customer. For us, we say customer, but we mean small business, right? And change the way that they thrive. When you can click with a team, we were just talking about it on the way in, just how close I've gotten with the Lithic folks. And when I have an idea, I can throw it to them. And it's not just like, thanks, please submit it. And what was it in grade school? Here's your idea box. Go put it in and nobody ever checks it. It's real and it gets flushed out and we talk about it. And by the way, we've come to them with ideas before and they've adapted and made it work for us.
So you're saying it's not just another ticket in the Kanban board in the backlog, and I'm not going to use specific names,
yeah,
but there's all these tickets you can create or cards or whatever the technology uses.
Exactly. So I think things like that are just game changing. And when you have people and you have the technology, and like Bo kind of mentioned, on the back end, they're working with the networks. They're working with these folks to make it easier for us to tap into. And then on the front lines, we're working with these SMBs to hear what they need. The conduit between the two is our wonderful team and the Lithic team, and talking all the time and keeping that line of communication going.
When I hear Ariel talk about this, all I can think of is like, you got this product and you've got infrastructure. And in order for these unique scenarios to work, you've got to be adaptable. Help us understand what that looks like. I mean, he kind of hinted at it a little bit, but like inside the engine that delivers that for Ariel and team.
Yeah, I'd say the first thing is it starts with partnership, right? Like, we are only successful if Receive is successful, and that sort of flows both ways. And so that's a cultural thing that sets the tone. I would say in terms of the delivery model, we are able to be a lot more nimble than a lot of the more incumbent players, in part because we're actually very opinionated about where we see the world going and the types of use cases, the types of products that we support. And that allows us to really kind of have the right swim lanes and say, hey, like this idea from Ariel or Receive, it actually very much aligns with, what we think the world needs. And as an infrastructure provider, the last thing I'll say is like, we really need to partner with innovative companies because they push us and they allow us to kind of unlock the functionality and the feature sets that we partner with the networks on delivering.
I like how you approach this. It's modern businesses have needs for modern infrastructure. You can have the needs that are modern, but if the infrastructure doesn't support it, then you can't really deliver on that product's good service or that promise that your partner has made to the end consumer. I like how you've kind of positioned that around the partnership relationship piece of it. And I look at this kind of funny, like, when a small business looks at things, they look at it as like buckets of cash. Like, there's a bucket of cash for this, there's a bucket of cash for this, there's a bucket of cash for that, whether it be expenses, payroll, miscellaneous things that go on. But one of the things that I've noticed as I did a bit of research trying to understand how Receive fits into the marketplace, but one of the things that came out very apparent is that most SMBs don't want to go get another loan. They just really want to get their money a lot faster. It's not about getting extra money a lot of times, just how fast can I get it? Going back into your mention of buckets of cash, we're looking at real-time access. What does that mean for a business owner that's trying to pay their bills today?
I'll say actually similar to what Bo was saying. If you think about it, the world needs to adapt, right? Imagine an e-commerce business sending their products by horse and buggy. That's exactly what we're seeing in the financial system and other things, right? We need to meet them where they are. For me, what's really interesting is like kind of what you mentioned. What we started learning with customers is they divide their cash flow into thirds, right? A third for operational expenses, a third for payroll, and a third for what they generally label as procurement. And what they were saying was to go get a loan is expensive. To go get a loan is difficult. I don't know. I don't want to do a personal guarantee. What is FICO? I've never heard. What are those 4 letters, right? When we started talking to these folks, they came to us with all these problems. And I kept saying, okay, these are infrastructure problems that we can help solve. And with a good partner, we can deliver them a product that's never been seen before. What we started to hear was across the board. Hey, I sold X amount of dollars and it's stuck. It's at the processor. It's Amazon's holding it. Shopify's holding it, whatever it might be. And I'm never getting that money fast enough. What if I can take that money and invest it into marketing? What if I can go buy product at a discount and get net 7, which I didn't even know existed? Basically, the faster you pay, you get a discount. So all of a sudden, they're telling us, hey, I don't want to pay triple-digit APRs for these things. I don't want to pay double-digit. I don't want that. I just need access to my sales. My business is a really healthy business. Help us unlock that potential. And that's exactly why I started Receive.
As Ariel is talking about this, it really sounds like a democratization of liquidity. How does that align with what you're seeing from partners at Lithic?
A lot of these businesses ultimately just have a bit of a liquidity challenge. And I think the opportunity is really to get them access to their money a lot more quickly. I think that's something that we see across the board where, like, if you think about it, like financial services is like pretty straightforward. It comes down to like, can you get me like, my money? Like a big part of it comes down to, can you get me access to my money faster, right? And that's one of the core ways upstarts are able to, move more quickly and innovate more quickly than the incumbents.
So Ariel, one of the things that stuck in my mind is you were talking about your distribution channel and how they approach the market with this. And I thought it was interesting that they brought up the fact that a lot of times they'll describe it in a way as, hey, Mr. Small Business, why don't you just be your own bank? Don't go get the loan, be your own bank. And so as I think about that, if earned revenue access works this well, what are the biggest compliance risks and hurdles? And how are you managing that balancing act to move fast and stay on the foresight of it, but stay compliant? And I'm going to swing over to Bo to answer this. How do you guide your partners to innovate without crossing that line of compliance that just might get them in trouble?
I would say it goes back to this notion of boxes, right? Like we talk about incumbent players putting customers in boxes and that not being a good thing. And I would refine that a little bit. Ultimately, like you do want to have boxes, but you want to be flexible on the boundaries when it makes sense. And the boxes allow customers to move more quickly and be more nimble. And you just want to continuously revise and, be iterative about like, hey, like, is this a boundary we can push? Or is this a black and white, line that we just can't cross? And ultimately, it just comes down to this notion of like partnership where we only win if our customers are successful. And so putting them in like rigid boxes doesn't really work for that.
You're building a fintech product. You want to offer digital assets, but wallets, that's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Defense. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Defense. MoonPay scales wallets securely with Defense. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Defense to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Defense wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Defense, secure wallets built right.
You've had to align with these rules, right? At the same time, you move pretty fast. How did you pull up moving so fast, but staying within the rules?
It starts with having an incredible team, right? So an incredible team that's able to flush things out really quickly, work jointly and across different time zones. And it's really a special opportunity to work with such dedicated individuals. Then it's the partner side. It's coming to them with the ideas. I'll tell you, it was November 2022. I came to Bo and I said, Bo, I got an idea. He said, uh-oh. And I said, no, you're going to like this one. We're going to create instant access at no cost and no APRs. Whether it was on the VC trail or anywhere, whenever I would say these things, eyebrows would go up. Like, what are you talking about? And I would explain to them the business model. And just going back to what we said about partnerships, coming to them with something that's that innovative, generally people are risk adverse. And it's not a risky business. There's two differences there, right? Being risk adverse versus something that could be nefarious or risky. And once we kind of went through the entire business and how I wanted to structure this and help these SMBs, right, that 33.7 million, give or take, studies say 82% suffer with cash flow, but let's say 10%, have this problem and 10% really want it. We're talking hundreds of thousands of customers who need this today. So coming with the addressable market, coming with a solution that is compliant, and then working to make sure that we are fitting into the boxes, but that they're malleable when we need them to be, is the core element here. So for example, whether it was KYB onboarding, I'm super proud of the work that we've done there. We've worked with the bank, we've worked with Bo, and we're just iterative on this process. And I think what's been great is working with partners asynchronously as well. So things aren't stuck in these waterfall effects where you're waiting 2-3 months to launch something. We're able to get something out the door relatively quickly, again, with the bank's permission and everything, and then iterate, hear from customers, hey, this didn't work or this didn't work. And we can come with 3-4 presets that we say, hey, we tested this might work, this might not, and we move quickly. But with that comes the need for a partner. And by the way, most importantly, our customers, to hear from them what they need, to hear the pain points and make sure that we're actually servicing real needs for them.
But you'd mentioned that there was the partnership between Lithic and yourself around getting legal opinions and speeding up the structure and getting all that together clearly worked for your timeline. What was that like? And give us a sense of how that felt as you were going through that.
Just bench of, VCs, supporters, angels, and advisors. So they were able to help point me in the directions because there's what are the 4 realms of knowledge? So this was the unknown known. I know I got to go there. I just don't know how to get there. So they were amazing at guiding me. But even like you mentioned, getting the opinion that this isn't alone, right? Working on these things, we're doing right by the small businesses. That's a dream. We're challenging the status quo. So the ability to go get a legal firm opinion, come to, the Lithic team, work together on that, I think it was awesome. Now, concurrent with that, as I mentioned, prior, we were doing asynchronous development. So hey, this is how we're sizing. This is what we need to do. Okay, this needs to go. And again, it's really a testament to our incredible team and working with the Lithic team to make sure we are laying the process to be successful and move fast.
We're moving into the lightning round piece of this. Short questions, fast takes. But remember, quick reactions only, 1 sentence, how you feel about it. Ariel, you built the model around giving SMBs access to the earned revenue instead of traditional loans. Would you say that lending for small businesses as currently structured is fundamentally broken?
Yes.
And why?
An inability to adjust in real time. It's a failure to support the businesses the way they need it.
All right, Bo, your turn. So from an infrastructure vantage point at Lithic, if earned revenue access becomes mainstream, what happens to the traditional small businesses lender ecosystem? Does it shrink? Does it repurpose? Or does it evolve entirely?
It evolves entirely. I think industries are adaptable, and this is a huge change, but I think it'll be evolutionary.
We talked about the phrase "be your own bank" for SMBs. How many businesses are realistically equipped for that mindset before they've solved the basic cash flow issues?
If done right, every single one. Meaning the same way they're using their phones, the same way they're touching the internet. If things are presented in a digestible, educated fashion, every single business can be their own business bank.
So, Bo, when fintech enablement becomes easier, compliance becomes more automated, what's going to differentiate fintechs 5 years out? Features, distribution, trust, or something completely different?
Fintechs that understand their customer and build deep will go the furthest.
So, Ariel, moving back over to you, you've succeeded in reducing the amount of time it takes for them to get the cash flow in. What's next? Is it 24 hours? Is it instant? Is it transaction by transaction? What risks or unintended consequences should we expect by speeding up the process?
We want instant. I'm talking about you made a sale, we make that available to you. Now, with that, there's obviously inherent risks, but as we're looking at a business from a 360 perspective, we understand that this isn't their first time buying $10,000 on Meta for ads. Or maybe this isn't their first time doing purchase down the street at the USPS, right? Whatever that might be. Again, where we're in a unique position is we see what they've earned in real time, we see what they have in their bank account, and we see what they're spending on as the card issuer, ostensibly, right? So we're able to see a 360 view, which, just as Bo said, it's personalization. We know that, dear Mrs. Small Business, Mr. Small Business, 10 grand now will get you more product, more customers through the door, and grow your business. That's game changing. That's the blood of the business. That's the livelihood of them. And that's exactly what we want to do. In terms of what's next, which is an interesting one, just by our sheer product, we have customers saying, hey, y'all, can you do this? Or, hey, y'all, can you move over there? So it's funny because we have an incredible team of ideas and et cetera, but really we'll come up with an idea and we'll have 10, 20, 30 customers just bellowing from the hills like, hey, can we do this? So it's fun to see that what we're seeing, thinking, and hypothesizing is really coming to fruition on the street as well.
So, Bo, with real-time access, open banking, APIs, AI, underwriting, all these things converging together that we talked about, What do you see as the biggest threat for your model? Is it data quality, regulation, the economy, or something completely else?
I think it's always something that's completely unknown. Your known risks you can manage around, but there's just so much technology. Like, we're worried about being disrupted as disruptors right now.
The thing that we do every episode with all the founders. And yes, I did bring the famous crystal ball with me here today. I want you to look deep into the crystal ball. Tell me, what do you see for your customers? What do you see happening for them to help them benefit in the next 3 to 5 years from now?
I'm looking deep, and it comes down to one phrase: everything on demand. The same way you can go order Uber Eats or Netflix, you can click on a movie and watch it immediately. We want small businesses, and this is what I foresee happening, to have an entire financial suite at the tip of their fingertips. The ability to access cash flow is obviously where we're starting, but we see a much broader need that every small business needs. And again, the opportunity to service them is servicing the core of the U.S. economy. So we're excited by it, but to summarize it in one sentence: everything on demand, financial services style.
So, Bo, when you look into the crystal ball, what do you see happening at Lithic to support that very audacious goal that Ariel has brought us? What do you see happening in the next 3 to 5 years to support everything that Ariel just said?
I think what we'll see is like faster access to the most critical features and functionality from multiple partners, maybe the card networks, card manufacturers. Just across the board, we're seeing a lot of our partners on the enablement side become more cloud native, API focused. And so I think we'll see like an increased pace of delivery for everyone.
So we're talking about fast money. We're talking about doing things based upon data, making movements. How do you see the introduction of stablecoins as they are today and the way that they're being seen and all of the programmability that comes along with it impacting or accelerating your businesses? And I'll actually start with you first, Bo.
I think stablecoins are incredibly exciting. If you think about it, at the end of the day, it's essentially a bit of a permissionless form of money movement that's now increasingly becoming more regulated. Ultimately, I think the net effect is it will put more pressure on incumbent players to move money faster and to offer more competitive, we'll call it rewards to their customers. And I think that's a good thing, but I think of it as like a disruptive technology that will push us all to be better.
Ariel, what are they thinking about this? How are they wrapping their brains around the fact that we've got digital money that is referenced or pegged to a US dollar? Like, how are they wrapping their brains around that? And what are they talking to you about?
So there's kind of two sides here that I'll boil it down to. The end customer, in essence, doesn't really care about the infrastructure. What they care is the output. I need instant access. Like I said before, we want to be able to give them on-demand access anytime, anywhere. It's on the back of our t-shirts, right? That's our slogan: access anytime, anywhere. That's what they want. How we, as their service provider, do it, they don't really necessarily care. So I would say that that's one side. But they understand, as kind of Bo was saying, the ethos of, hey, instant, anytime, just pure liquidity. That's what they need and that's what they want. How we provide that to them, that they don't necessarily ring, true so much. But what I will say is where I'm excited about receiving, especially stablecoin, is what it's done is push forward the conversation that we've been talking about for years. This is a real pain point. Like, I'll never forget originally when I was going out to the market, people said, is 24, 48 hours really that big of a problem? 72, 96, everybody should have extra. And the answer is they don't. That's not what is going on in Main Street America. They need instant access. So when they start to hear that technology is matching their needs, I think there's a little bit of like excitement on their end to hear, hey, we're finally being heard. We're finally being listened to. Yeah. Now, as it comes to our perspective, right, card products are still existentially important because not everything is able to be paid by stablecoin. You still need card on file and things of that nature. And we're only seeing card products grow, right? What was it? 2 years ago, it grew by 15% CAGR, and it'll continue to grow, especially in the small business space. And my argument, or the team's argument, is that A lot of that is going to continue to grow if we give them access to this. So the infrastructure on the back end is really kind of up to us to help solve. But I think the ethos of we want our money now is being heard, not just from Main Street, not just from the technology side, but even from the governmental side, as you kind of mentioned on the risk side. This is now, it's no longer an afterthought. One time I got into this and I said, hot or not. It's not that fintech's hot or fintech's not. It's now core. It's the core tenet and foundation of any successful business.
Well, with both of you being fintech founders, and we have a lot of founders that watch and listen to the Fintech Confidential series, in one sentence, what's the one lesson that helped you build smarter?
Be aware of the market.
Fantastic. Ariel, let's see, can you get one sentence first?
Find a real problem, build vigorously, have a great team, and a supportive family.
Fantastic. Well, guys, I appreciate your time today. I mean, being here at Money 2020 inside of the Money Pod, it's always exciting. It's always great. But I think there are three big things that I take away from this conversation. One is that small businesses need access to their cash. They don't need more loans. The fintech architecture can be compliant, and it can move fast, and it can innovate all at the same time. And last but not least is that when small businesses win, everybody wins. And when fintechs focus on helping the small businesses win, then even more people win. So these conversations with you both have been fantastic. Well, folks, this does it for this session and this episode of Fintech Confidential. We focus really to make this more than just service level sound bites. I mean, we're here to show you really how real operators think, act, and lead their organizations. And if you've got any sort of value from this, please make sure you head over to fintechconfidential.com and subscribe. You can even find us at YouTube, Spotify, Apple Podcasts, you name it. We're just about everywhere. We go a lot deeper into a lot of other subjects as well on the website. So if you sign up, you'll get to hear about all of that. And also, just because they're not here doesn't mean you can't share this with them. So share this with anybody who wants to understand what's going on in fintech and what's going on behind the scenes. And as always, keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.